All right, silver is actually trending now. I've done several videos on silver and nobody cared, but it's actually trending in the search traffic. So I'm going to go over a bunch of things that could be good for silver, and we'll see if we're getting them and what's going on. And let me look at a longer term chart for silver real quick and just point out where silver has been. And this is not inflation adjusted, but we got a monstrous. This is the SLV. It doesn't go back far enough. So this is not the monstrous thing. This is just 11. So we did have a silver bubble in May of 11, but also in the 80s. There was a huge silver bubble in the 80s. And let me just get into the technical. So, I mean, we've been coming down off of a silver bubble since 11. And the question is this a little pre-spike before a huge bubble? Or are we just going to keep winding down? And sort of the long-term inflation-adjusted floor of silver is probably around like $9, and we're getting close to 19 again here. So I guess hourly chart is good. All right, so recently we have had silver just kind of trading in a boring range here, and it looks like it wants to do a breakout. This is a good technical setup. We saw gold just recently, this past week, has done a similar type setup and popped. Let me jump over to gold. So yeah, gold did the exact same thing earlier. It broke out of the top of this kind of boring sideways range, and it has done a pretty good run. So this is one thing that is very good for silver. Like silver will often trail gold and it will follow it. And gold did a technical breakout and it did do it already. And it's not showing signs of breaking down here, just on the technicals. But the technicals and the fundamentals for gold and silver are different. But that is usually good. If gold is breaking out, that is generally good for silver, and silver generally follows. And then if it's actually good conditions for silver, silver will make a much bigger move up than gold will. And so, yeah, that's what we're getting right now, as we're getting a technical setup that looks like silver might want to break out to the upside. And, gold made a run that would put silver. Well, I mean, the silver spot price would probably hit like 20 or something like that. Um, okay, so that's the technical setup. It looks good. It looks like a good setup, and it looks like it is finding support. And if it does find support today, that should be good for silver. Let me look at first Majestic. This is my favorite silver miner. Just as far as jurisdictions and management and actually being a silver company go, because this company it's a Canadian company. Their mines are in Mexico, and they're actually silver mines. Like this company focuses on silver. It's actually a silver company. It's one of the only companies in the world that's actually a silver company, a silver mining company. And they've been they've been tracking the silver movements pretty closely, a little more volatile than the general silver has been here, but potentially the same breakout chart here. And you can see this went from 5 to 10. So silver went from, well, silver moved a lot. I mean, silver got down to 11 and it's near 19. So silver almost doubled, and this has slightly more than doubled. It's not moving that much more than silver is actually so far. Um, but as far as buying silver, like the SLV is the JP Morgan silver, and they have like more than half the world's monetary silver. And I think they have very little counterparty risk. It's one of the safer American primary banks that's fully backstopped by the Fed. So the SLV, I think, is decent as far as paper silver goes. There's also PSLV, I think. Let me check. Which is Sprott. Yeah, the Sprott silver, and this is vaulted in Canada, and that's another silver, paper silver that has physical delivery. So this is supposed to be physical silver, and they talk about you can get physical delivery with this. And this one actually has already started to break out. I didn't expect to see that. Huh, yeah. That is pretty cool, actually. Yeah, so as far as like the SLV, as far as the SLV goes, the physical silver is already broken out ahead of it. So I think silver might move. Yeah, starting today. And then yeah, First Majestic I like. Let me go to their site and show you a couple things. Yeah, so here's First Majestic. I just wanted to take a look at the mine and the coins. So they actually mint their own coins. I wanted to actually look at physical silver here. And the San Dimas mine is their main mine. If you go to the bullion store, then you get a white screen. What's going on? Sorry about that. It popped out to a different tab, so I lost the. But anyway, here's the First Majestic bullion store, and actually, their price per ounce on bullion coins has been 20. It's been the same price the whole time. Silver went from like 17 to 11 to now it's almost at 19 trading the paper silver, the spot prices. But these coins have been 21 bucks the entire time. They haven't gone up now. It's the same price. So this is pretty interesting. And these guys, yeah, well, it looks like they're getting a ton of physical demand and slow processing time. So I don't know if this is COVID related or it's just people are just buying a bunch of silver right now. But anyway, this is an interesting thing that's going on. I was looking at, and the silver prices were coming down. I was in Singapore and I went to the Bullion Star shop, and I'm like, went and the prices of the physical silver were terrible. They were even higher than they were. I was just like, this is stupid. There's no point in buying physical silver at any of these prices. I mean, like the physical price of silver, I think was like 13 or 14 an ounce, and the coins and the coin shop in Singapore were like 24 an ounce or something. It's just like, what? Like, it makes no sense. Who would buy that? And so, yeah, these coins are minted by them, and they're 0.999 whatever fine. But it's not from one of the big mints, like as far as like a retirement account or something. This is not investment advice as usual, but these coins probably won't work in a retirement account. But they are pure silver coins, and the price of these coins has not changed relative to the spot price, which is really interesting. And I'm on macro trends here. This is 100-year inflation adjusted. You can uninflation adjust it. So you can see, like, if you take off inflation adjustment, it looks like silver just always goes up. Everything goes up if you take inflation adjustment off because dollars just lose value all the time. But if you throw out the inflation adjustment on, 19 is not historically really cheap. Like, this kind of $10, you know, somewhere in the $6 to $10 range is sort of a historical cheap price, inflation adjusted. So we're not that cheap on silver. I'm hearing a lot of people saying like it's the cheapest silver prices in the history of the world or something, and it's not true. We've had a couple of bubbles in silver, so this is a thing to watch. Well, I'd like to point out first, we're getting sort of a downtrend in silver, and then you can see here, this was like the roaring 20s. Silver was doing poor while the stock market was doing well. Okay. And then we had a deflationary stock market crash here. Boom. And silver crashed right along with the market. And so in a deflationary environment, silver does really poorly. Like, deflationary generally means worldwide commodities are getting cheaper. Silver is a commodity byproduct for the most part, goes down with the commodities, but also as a monetary asset, people sell off monetary assets during crashes as well. So silver gets both. Like in a deflationary crash, silver eats it. It sucks. So that's exactly what happened in the Great Depression. So it's very important to figure out if we are in like a Great Depression kind of a scenario, or if we're in a Venezuela hyperinflationary scenario. because that's the dead opposite. Like in a high inflation environment, silver will kill it against the dollar, and that's really good for commodities. And so that's what you want for silver. You want a good commodity environment and you want high inflation. If you get deflation and a bad commodity environment like the Great Depression, a deflationary spiral, silver will crash, and then you can see after the Great Depression crash, silver popped and wobbled a little bit, and then this whole period where silver was really high priced was all high inflation. I mean, the top of the inflation I think was about the 60s here, and then this was a big stagflation environment that had high inflation and poor growth. So it was high inflation and good commodity environment where silver was doing well, and so you can see, I mean, it just went absolutely crazy here in the 80s, but then it was about 82 or 84, somewhere, yeah, somewhere around here is where we started the everything bubble and the stock market started taking off. And so silver did not do well in that environment, and inflation has been coming down and coming down. And so, yeah, this recent, so yeah, the 2000 crash here was a long-term silver bottom, and then you get a tiny pullback in silver during the housing bubble crash, but silver just ran straight through that to a peak in 2011, which is sort of arbitrary spot for silver to hit a peak, I think, because there's not huge fundamental changes there that make sense to me. And yeah, so we've had the velocity of money decreasing since the dot-com bubble. This is all lower velocity of money. This is all decreasing inflation. You know, we're down at 0% interest rates during this period, which is not a high inflation environment. That makes a bunch of sense for silver. And stocks have been doing well. It's been really bad for commodities. So this spike in silver is strange. And right, so those are the indicators we want to look for. Let's go check some stuff. Okay, so I'm on the Federal Reserve website here. This is the Fed balance sheet chart. And you can see it just posted yesterday, and it's actually below 7 trillion now. It's been coming down. And if I just zoom in here on the recent action, this is where we came into the crisis, the COVID crisis, and the balance sheet almost doubled. It went crazy. But you can see here, as of about a month ago, it flattened out and it has been coming down. And so I looked at the actual balance sheet, or we could do that now. Yeah, it's just down here. It's just at the bottom of this page. There's a link for it. Okay. Oh yeah, we're still live. Okay, so yeah, here's the actual balance sheet. So you can see what they're buying. I mean, the Treasury securities, so this is last year and this is last week. And so we're down from last week, and they are buying treasuries, and then mortgage-backed securities, not so much. And then the liquidity swaps is the interesting one. This is what's coming way down. And so the swaps that's central bank loans to other countries' central banks. And that's the thing that's coming down. So yeah, sorry, I was looking for the corporate bonds. They have their corporate bond buying sheet, and it must be just other assets here. And it's tiny. So there's no corporate bonds listed on their consolidated sheet. And as far as other assets go, it's super tiny. Most of the change in the sheet is liquidity swaps with other central banks. And as of right now, they're buying some treasuries, and that's about it. They're really not buying much. Yeah, so the Fed is not really driving inflation. They're not pumping their balance sheet. And then as we've seen in Japan, like the central bank they can't necessarily create inflation even if they want to, because they just create bank reserves, and it doesn't necessarily create inflation in general prices or in the world commodity market. But this is the the Treasury general account. And so this is the money that, well, if you pay taxes, it goes here. If the Fed gives money to the Congress, to the Treasury, this is where they hold it. And so as you see this going up like parabolic, it's absolutely crazy. I mean, historically, the TGA was in private banks and it was super low. And then after the crash, it was just in the billions, 20, 30 billion or something like that. And this was at the Fed now, since it's gotten higher here. It was held at the Fed, and then it started working its way up and getting kind of crazy more recently. But yeah, since this crash here, I mean, it just skyrocketed from billions to trillions. It's 1.6 trillion. But this is what I wanted to point out here is, yeah, it's been just screaming upwards since that crash, but it just flattened out and it's actually starting to move down. And so I call the Treasury general account the helicopter general account, because this is money that Congress spends into the actual economy. And yeah, it's spending money. It goes into people's bank accounts, and this can actually really drive inflation. And if this is peaking and it's going to start coming down, that means Congress is pumping money into the general economy and not taking money out. Like all of this on the way up is the Congress taking liquidity out of the economy. And if this thing reverses, that is going to be an inflation signal, and it may start reversing now. So that's an important thing to watch over the next week. And it's possible for them to pump $1 trillion in like a week or two, just like wham, and you won't see it until the end of the week. But as far as an inflation indicator, this Treasury general account is a really good one. And then the bond trading, let's check out. Yeah, so here's the Fed funds rate. And so this is the interest rate in the economy. And just in general, the Fed funds rate, I mean, the Fed, assigns the interest rate. Everyone says the Fed controls the interest rate. And I say they don't control the interest rate. Like the bonds trade based on GDP and inflation expectations, and that pushes the interest rates up and down. And the Fed funds can't really control it, and they just announce. I mean, they just really announce where it's trading. And if they're wrong, or if they try to hold it at a level, they just can't. They can't hold it. So, I mean, what I usually do, you can see these kind of flat spots. Here it's like a super flat on the top. Like, okay, I mean, if you just round this thing off, that's where it would have traded without the Fed intervening. Or if you smooth out this flat line here, like it would have just traded down. There's a couple spots where it's just like jagged and kind of flat. But if you just rounded it off, like that would be what it would look like anyway without the Fed doing anything. But right now, what we want to know, and this is forward looking, is are these bonds going to trade negative? Are the interest rates going to trade negative? And so we can look at the sort of the yield trading charts as well. But the Fed funds, I guess, trails the bond trading, and they try to hold it at certain levels, and they can't. Like they tried to hold it here, and it doesn't work. They try to hold it, it just doesn't work every time. You see these flat areas, like what's the point of doing all that? But what we've had recently here, we had a peak and it came down, and so the Fed is trying to hold it here above zero. And so is it going to trade down or not? I mean, how long is it going to hold here? And you can see it kind of flat and up a tick and then dropped and then flat and up a little bit. Like if this trades negative, if the Fed has to announce negative interest rates, then that is a very bad for inflation. Like negative Fed funds rate, negative bond yields is a deflationary signal. And this is a huge indicator to watch for silver. Like that Treasury general account, that's like forceful helicopter money that can cause inflation. But this is the actual worldwide general economy indicator that's super important for inflation and super important for silver. So if these actually do start trending up, like if the Fed is announcing, near zero and they start getting higher, then that's an inflationary indicator that would be good for silver. If these things trade down, bad. As of right now, not getting much information. We don't know which way they're going to go. So yeah, so far, I mean, basically we have a good technical trade setup on silver, and we've seen gold move, which is good. And we've actually seen the physical silver move a little bit earlier, which is a good indicator. But we don't have any clear indicators of an inflationary environment that would be really good for silver right now. And here's the bond yield spreads. And so the spreads are decreasing, which would be a flattening yield curve, which that's not an inflation indicator. That's hasn't really picked a direction. And if we just look at maybe like the 5-year bonds themselves, um, yeah. So for inflation, you want a steepening yield curve and higher interest rates on that yield curve. And right now we're getting low interest rates and flattening. So it's not going deflationary, but it's not steepening into an inflationary setup right now. And what we have is the bond yields trading down, like the 5-year, 10-year. Yeah, so this isn't a good look for inflationary indicators, really. So this is kind of the thing that I'm thinking is going to happen. I think that there might be a good technical setup right now, maybe for a week or so for silver, just based on the charts. But what I'm thinking is going to happen is it looks like the bonds are trying to break down. What's the 2-year doing? It looks like the bonds are trying to trade down, and if they trade down, that is a deflationary signal. And I think what probably the Fed and the Treasury are going to do is the Treasury, once the bonds trade down to a point that's bad for the Fed funds rate, then I think the Treasury general account will blast some helicopter money to try to create enough inflation to keep to just force the rates back up to where the Fed won't need to fight against negative interest rates. I think that's the game that they're playing now. And so um, if they're doing that, that should be good for gold because they are inflating. I mean, there is more monetary supply, but if they're fighting against a deflationary scenario, as far as worldwide commodities go, as far as exchange rates between other currencies go, that's not going to be good for commodities, and that won't be so good for silver. Like you'll have the monetary inflation will be good for silver, but the negative commodity environment won't be. So that would just be good for gold. And for silver, you want both. You want inflation and good commodity environment, which is rare. But when it happens, silver takes off. And it looks to me like the bonds are trying to break down a little bit. And so yeah, I want to see. Yeah, I don't know if I really like the silver trade so much. This is gold. Sorry, I clicked on the wrong one. But yeah, you can see gold already started to move, and silver here looks like it wants to move also. But yeah, I think that the money printing is actually slowing down almost to a halt, and they haven't started pumping helicopter money yet. So none of that fundamentally really looks that good in the short term for either one of these. But gold is breaking out right now in a time period when there's not a bunch of money printing. Like this kind of crash happened with the stock market crash, and the rebound makes sense. But then when we actually did have a lot of liquidity, gold didn't move that much. And now that we don't have liquidity, gold is moving. That doesn't make sense from a liquidity and kind of money printing inflation standpoint. For a long-term gold position, you want to see just monetary inflation. It doesn't need to correlate to commodities or anything like that. let's look at the DXY. So the strength of the dollar, like for silver, you want to see inflation in the dollar, and you would want to see the dollar breaking down. Dollar breaking down would be what you would expect. You want to see the interest rates going up. You want to see the dollar breaking down. For an inflationary environment, that would be good for silver, where the dollar is getting weaker against other commodity currencies. But we're not seeing that right now. Like in the dollar, let me go out to a longer term. Yeah, so I mean, the dollar, people are saying it's breaking down, and like, yes, it did make a move down here recently, but you can see go all the way out to a weekly. I mean, we have a super long trend since the 2008 crash on the dollar. The dollar has been on a pretty decent, strong uptrend, and it's above, it's above support on the uptrend now. And until it breaks down through here to somewhere maybe 90 or something, like if it broke down to 95 or 90 or somewhere like that, where it actually looks like the dollar is setting up to really break down. This does not look like the inflationary environment that would favor silver in the long term. So I'm not really, I was kind of getting excited about silver when I started the video, but I don't think that the inflationary setup is there for silver to do that well right now. But we may see it soon. Like if that helicopter account goes crazy, if this dollar breaks down, those could happen at the same time, and that would be trying to push the interest rates up. And so if they're successful at doing that, that's one thing. And if they're too successful in doing that, where they lose control and the interest rates and the inflation take off to the other direction, then silver and gold would be in a monstrous environment both, and silver would probably be better. So that's kind of the outlook. Uh, yeah, I still think for now the fundamental setup is better for gold than silver until inflation really makes sense. Like inflation doesn't look like it's taken off yet. Um, so yeah, I guess not investment advice as always, but if you're an inflation person that thinks inflation is going to take off sooner than later, like Luke Groman talks about this a lot, or Peter Schiff, like it's inflation right now and it's just going to get away from them. Silver should be a good one. And if you are in like the Brent Johnson or the Raw Paul camp where you think that, like, yes, the Fed's going to print a bunch of money, but other countries are going to print probably more, and the dollar is going to get stronger because other countries can print more than the dollar can, and that could push down international commodity prices as other countries weaken, and that's going to be bad for silver, and it's a deflationary worldwide monetary environment that would be okay for gold and not good for silver. And so there's just not a clear signal on either of those cases happening yet. Like we're hovering around the middle, and the Fed and the Treasury are juggling right now, and I think they're trying to stabilize it in the middle, and I think it's working, and it hasn't broken either direction yet. And yeah, so in that environment, I like gold more than silver. And we'll see if the Fed and the Treasury, how long they can kind of do this thing, juggling the rates and trying to keep, they're trying to keep the Fed funds rate around zero. And the Treasury has this pile of helicopter cash sitting on the sidelines, just like ready to go as soon as, well, I would think they'd fire that as soon as the bond yields start trading negative is when they would fire that. People are saying they're going to shoot out a bunch of money near election time just for fun, just for election stuff. I don't think so. I don't think that's what's happening. I think that they're watching the interest rates and they're trying to balance the Fed liquidity and the helicopter money and trying to keep it around. That's the game they're playing now because the Fed's tools on their own are kind of running out of power. And so now we have the Treasury and the helicopter, the MMT, it's starting up, and it hasn't picked a direction, and that's the outlook. Yeah, so I like silver. I like gold more than silver right now. Even though silver looks like it does have a good technical setup, and it quite possibly could make a little breakout like over the next week or something to follow gold. I think that technical setup makes sense. But for me, like I'm looking at, I wanna find the environment where silver is going to be good for the next 5 or 10 years as a spot to buy silver, and I don't see that. I don't see that right now. Um, but yeah, I'm very interested in silver if that environment happens where stocks are just doing terrible and inflation is going crazy and a commodity environment comes out with high inflation. That's where silver would do great. But this environment where everyone's printing and it's stocks are going up and commodities are whatever, less interesting for silver. All right. So hope that was interesting, and please like and subscribe. And oh yeah, MMT gear if you're interested in some t-shirts, and drop some comments and I'll chat it up. Yeah, so we'll see if people are actually interested in silver information this week. Unlike the last couple of months when nobody was interested at all. Cheers, happy trading.